Good afternoon, everyone, and welcome to Stock Market Today. It's Ali Coram and Ed Carson here with a breakdown of the action in today's session, where we saw a lot of red. Walmart with a profit warning hitting retail stocks especially hard, and we have a lot more earnings reports coming.
It was a pretty rough day on the market today. We would take a look at BJ's Wholesale, which held up reasonably well, along with Schneider Energy, while Fortinet was a big loser.
All right, we'll get to those, but first let's take a look at the major indexes. So the NASDAQ today down about 1.9% by sessions close. We also had the S&P 500 down 1.2%, the Dow down 0.7%, small caps also down about 0.7%. So pretty big down day. Looks like we're trying to hold above a key level here, Ed, but not in the place that we want to be with all of the news happening this week.
Well, and that's why it's coming down. We're getting these earnings warnings, and this is why it was like when we got near those highs late last week, technically there were reasons why you would think why you might be pulling back. We'd run up. There were the 12,000 level, the early June highs. There's other indicators suggesting high. And then we had the Snap warning. And today we had Walmart warning, Shopify basically saying 10% of the staff were cutting. And that's ahead of earnings tomorrow, which presumably will be terrible. So we're getting those warnings. We're now maybe at some point that, maybe some of that stuff will be priced in. Obviously, we're going to have Google earnings just in any moment, Microsoft earnings, maybe the Snap news takes some of the sting out of bad news from Google, say, if there's any. But there's a lot of news. They got the Fed tomorrow. I mean, it is a pivotal week. There's still so much news this week, and maybe we bounce back from here, but maybe we just keep on tumbling lower back towards lows. And it's not a situation. This is when you want to be mostly sitting and waiting to see what happens, and maybe things work out well, but not a whole lot of good happened today.
Yeah, and it's exactly why we were saying with that move above 12,000, even though it looked promising, you had all of these headlines coming up that made making new buys pretty difficult with that extra risk, just even the broad market risk, even if it wasn't specific earnings to the stocks that you're interested in. But because we are seeing some broad weakness right now, it looks like we're on the NASDAQ back below, some of those highs from late June, early July. We are still above the 50-day line, but tomorrow, depending on how some of these reports shake out, that could mean a real test of the 50-day.
Yeah, and we could also whipsaw, because we could tumble or rise one way, and then the Fed comes out, and then after the close we have Microsoft, and we have Meta Platforms. Tomorrow, and then a whole bunch of stuff out on Thursday before the open and after. So you could see the market whipsaw back and forth, in addition to going up or down. Just a very difficult situation to be trying to trade in.
So does it seem like today, maybe for investors who had market exposure with index ETFs or sector ETFs, that today might have been a day to cut back some of those holdings?
Yeah, you could argue that, maybe if there was little things like energy plays, and that you might do it, but and medicals held up pretty well. But in general, I think investors should have been thinking about taking some partial profits, even on ETFs or sector ETFs, and cutting losses. And just being prudent. As David Ryan was saying on IBD Live earlier today, your goal in a bad market is to try to avoid losing much money, try to minimize those losses, not really trying to make money. And that's just the situation here. It's just really a difficult environment.
Right. Yeah. Even in a healthy uptrend, we don't want to be making big bets on a big earnings week like this week, and you got the Fed. So in these conditions, that makes things especially tough. Let's move on and quickly check in on the S&P 500, Dow, and Russell 2000 as well. So the S&P coming down to test its 50-day line and those recent highs that had just gotten above from late June, early July, but closing right around that level. We also have the Dow 0DJIA holding up a little bit better. Still some resistance around that round number of 32,000, coming in a bit, still above the 50-day line. And the Russell 2000, this one holding up much better than the other major indexes, Ed. So holding above those recent lows, and a pretty quiet day today, all things considered. But you mentioned energy, a bright spot today, so that potentially having an impact.
Yeah, probably did on the Russell 2000. And, currency is a big impact. That was part of the negatives on Walmart. It was part of the negatives on Microsoft warning a few weeks ago. Less of an impact on the Russell than some of the other names.
Okay, let's also take a look at the 10-year Treasury yield. As your TNX looks like down about 1.2% by the end of the day. Intraday, undercutting even that gap down from a couple days ago from Friday. So coming off a bit. Any tell here as to what the market might be expecting from the Fed tomorrow?
No, it was interesting action that the stock market was sort of like just weak all day and didn't, for much of the afternoon didn't do a whole lot. But Treasury yields came up quite a bit off their lows, though. On the short end, it actually, some of the yields actually rose, so that it did become more inverted today. It's just signaling a pretty strong, risks of recession. On Thursday we might get something that's a rule of thumb recession, not an official one. So yeah, it's not a whole lot here that changed here, but it's just not a good sign for the economy.
Okay, and let's also talk about retail because this XRT ETF gives a good picture as to what's happening in that sector today. So gapping down by about 4.2% here. And like you said, Walmart definitely having a big impact here on this sector. And I mean, it speaks to the economy and the health of the consumer. Your thoughts?
Yeah, and it's just like a lot of other things that come above the 50-day line. So there's a lot of these positives, and then just came down. And Walmart had already warned once, or when they're warning, but it wasn't enough. And it's just shows you how weak the consumer is. It's just a tough environment. Prices are high, costs are high, while demand is falling. That's just a terrible environment for businesses. I mean, you can't get, there's not really much you can do about it in that kind of scenario.
Let's also take a look at software. Here's the IGV tech software ETF, also taking a big hit today, down 3.2%. So this was an area where we were starting to see maybe a little bit of signs of life late last week, but getting slammed here today. It looks like, with the exception of the design software stocks, software sector showing a lot of signs of weakness at this time.
Yeah, there was a lot of weakness here. I'm not exactly sure why it was so weak, the software sector, but definitely in the security software, which we'll look at later. Microsoft was a big loser. Microsoft is down a little bit after hours, as I mentioned. They missed on the top and bottom lines. It looks sort of like Google may have done the same, but it's up after hours, just while we're in the talks of that, which is not in the software field.
Well, yeah, we'll check in on those maybe real quick at the end of the show, just to check in on that early reaction to those reports. But moving on, one retailer that's held up better than most is BJ, the ticker there for BJ's Wholesale, down about 1.8% by the end of the day, but some nice support at the 21-day line, Ed.
Yeah, I mean, rebounded. It didn't open well. I mean, the Walmart warning came in, but yeah, bounced and above the 21-day line pretty quickly and just held steady the rest of the day. It's not buyable right here. I mean, somebody said, "Oh, I'll buy it off the 21-day line." It seems like in this market not to do that, but held up well. It's not far from, the buy point of 71.10. It's basically been consolidating right around that level for the past couple of weeks. So I think the action here was pretty strong. This was our stock of the day today. Again, just something to watch closely. It's not there, and we could see. So it doesn't mean it holds up today. Doesn't mean it's going to hold up tomorrow. But this was nice action on a day that was really not positive for retailers at all.
So we'll keep that one on the watch list. Next up, LNG. Strong move today. We've got that RS line blue dot held up nicely into the close, finishing up 3% for the day. Some strong volume and an early entry that warranted putting the stock back on leaderboard.
Yeah, I mean, it broke that trend line. The news that was out is that European natural gas prices are soaring as a result of Russia cutting back on natural gas flows to Europe, so that increases demand for U.S. LNG. I mean, U.S. natural gas prices are rising as well, but that spread is probably very high. The demand is going to be very high. And you can imagine people wanting to lock in those contracts regardless of the price, just because they want that security. So definitely a positive day here. Nice action. The volume was strong. That was one thing, is that haven't seen a lot of strength in volume. Hadn't really seen that much volume on LNG until today, but which is something that we'd seen with a lot of stocks that were making moves. But today, definitely some positive action there.
Yeah. And especially in this market, it's hard to find a setup that's not without some sort of flaw or warning or risk here. So what would be your thoughts on the entry here? We had quite a few up days in a row, only one down day off of this bounce off the 200-day line. It's, let's see here, about 8.5% above the 50-day. So that's not all too bad. But what about just the strong move that this stock has made over the last 2 weeks? Is there any concern for that?
Yeah, I mean, look, obviously, if natural gas prices, especially in Europe, pull back, I mean, this could quickly reverse. And if Russia's president pushes the button, says send more gas to Europe, I mean, you could see those prices plunge, and this could plunge literally in an instant. In addition to the fact that, yeah, you might expect a pullback. So I can understand to say, I'm going to wait. Maybe it pulls back. Maybe it pulls back to around the 140 level, that trend line, consolidates a while, lets the 50-day catch up. There's also earnings coming up in a little over a week. With energy stocks, often people just sort of look at the price and care more about that than the earnings. So there are always flaws. There's reasons to be cautious. This is looking pretty strong. There's a lot of positives, but investors have reasons to be gun shy, just in general.
Yeah. And the IBD Live team has stressed the importance of early entries, of course, being selective. But if you are going to put a little money to work in this market, going with those early entries, and then in most cases, treating it like a short-term trade until it proves otherwise, and especially with earnings around the corner. Those who took a stab at this one today will want to see what that profit cushion is like heading into the report. And that's something that we haven't really talked about all too much this earnings season, because we haven't really been buying a lot of stocks. But for the ones that you do own, it's, a good rule of thumb. People do treat it differently, but a good rule of thumb is you want to have maybe a profit cushion of 5 to 10% if you can, just with that risk that earnings can have on the table for some stocks.
Yeah, that's really important. And then, earnings season really heating up. So if you're holding things, probably over the next week, you're going to have some stocks that have results. So definitely keep that in mind.
Okay, and we mentioned the weakness in software. So let's take a look at Fortinet and the security software group taking a hard hit today, down almost 8%, above average volume here. It's hit resistance at the 200-day line a couple of times here, and now really selling off hard, still holding within this consolidation, but not what we want to be seeing. We started to see maybe some positive signals that this group was trying to turn around, but this kind of damage does not make the chart look all too good.
No, it does not. And the security software was terrible today, and software in general was not good. But this was the worst performer on the S&P 500 today. It wasn't Walmart, which was second. This was the worst. And this is why we care about resistance. This is why resistance matters. It came up several times to the 200-day or around there. And so you're going through that decisively. There's a reason why we would have cared and said, yeah, that would have been a positive sign, because this is what else can happen. I came up there and it got just really hammered. And so that's why it was sort of a pivotal moment. You want to wait for it to clear decisively, and it didn't happen. Instead, this is what happened. So probably a lot of repair work. I think people will be nervous about this one when it comes up to the 200-day line again after all this many times. So something to watch for, in the areas of strength, because a few days ago, it was just, earlier this month, this had a relative strength line. It was a blue dot. I mean, it was actually for a software stock to be having an RS blue dot. But, that alone isn't a guarantee. It was just showing a little bit of relative outperformance, and it's all fallen apart today. So that's just a lot of things that people have to be aware about in this kind of market.
Yeah, and earnings coming up next week. So, and peers also reporting. So you got to keep that in mind too with this earnings season. Before we go, Ed, let's just quickly take a look at Google and Microsoft. So it looks like Google, that early in that initial reaction, stock up about 2.8% on the report.
And I just want to note that I believe, and I didn't check it the last second, but I believe it wasn't it was the worst close in I think about 16 months for Google. So it's bouncing, but after really falling. Remember this happened after Snap. Like Snap, it tumbled. It's fallen quite a bit in the last 3 days in reaction to Snap. So the fact that it's rising a little bit after missing views. I mean, and why is it rising? Because it already fell, I don't know, 10, 12% in 3 days. So you get that back, not a whole lot as a result from that. So,
okay, well, we'll have to see if that has an impact on the broad market action tomorrow or not. But we've got to look at Microsoft as well. This one's down less than 1%.
Yeah, and again, this one has also fallen quite a bit. It was a big loser today. It's down. It missed views on both top and bottom line. Both of these companies said. One more to note is that Enphase. Looks like they came out with earnings. That one is up 5%. Maybe it'll really clear. I mean, this has been really tricky, so hard to know, but this one looks like it might clear this consolidation. Again, this one might do all sorts of things. It tends, but right now that's a positive symbol.
Yeah, we'll have to see if it can keep it up tomorrow. Overnight action doesn't always translate to the following session, as you are always so right to point out in your futures column, Ed. So we definitely will watch that one tomorrow, along with SolarEdge moving up in sympathy. This one perhaps a little tighter recently, but saying that a solar stock is tight is, I mean, these are just so wild. So it's on a relative basis tightening up a little bit. So ones to watch tomorrow. Thank you so much, Ed, for that. And thanks everyone for tuning in. We'll be back with more tomorrow morning on IBD Live. So we hope you join us, investors.com/IBD Live, for all the details on that. And make sure you're keeping tabs on investors.com for all the latest stock market news and analysis. We've got you covered this earnings season with the analysis that you need to know to make those smart investing decisions. So we'll see you in the morning, and we'll also see you right back here tomorrow after the close.